Good afternoon, Quasar Markets Live. I have him right now, Michael Litt, who has been absolutely spot on with this administration and the things that are going on. Michael, listen, there's a lot going on in this administration. We've actually named this thing called the Trump retreat. You nailed it. You said, look, cooler heads will prevail. With Scott Bessent, we see now where Doge has done its thing. And now we're seeing where Elon Musk is leaving the Oval Office, leaving the White House. I'm not really sure what he's doing. Michael, talk to us a little bit about what is actually going on. Tell us the next steps of what should we expect here.
Well, I don't know if anybody can ever know what to expect. But one thing that we talked about in almost every one of our conversations that we've been doing every 2 weeks since mid-February is that the third rail was the independence of the Fed.
Right.
And once that third rail was touched, essentially the bond markets really started to melt down. And we noticed that basis trade between the futures and the cash took a big swing. The Fed had to step in and provide a liquidity facility, one really big bond market participant said to me, we were one futures expiration away from the U.S. not being able to refinance its $30 trillion in outstanding debt.
Right.
That's how bad it was, Stephen. There was pushback internally from senators and others within the administration, I believe. The approach and that's separate from the approach to the trade negotiations, right? So you've got two things going on simultaneously. The trade negotiations have not gone well. I said 2 weeks ago that the administration had already lost a rook in the chess match. My view was by the weekend, when the weekend arrived last weekend, they had lost a bishop. They really had to back off. They put China in a much better negotiating position because of their approach to begin with, and then how it played out with other countries.
All right, so define me what the bishop, the rook, we're playing chess now. I've heard the words 4D chess, so many things. And I don't think they're playing 4D chess. I'm not seeing this, Michael. I'm not seeing where they are outmaneuvering China. I'm not seeing any of that, right?
No, in fact, there's some really smart people who are in the shipping business who tied something together for me. Remember, we said we have a technical recession in the first quarter because so many imports came in for inventory stocking. Inventory stocking was really big in Q1. And when you ship things from overseas to build inventories, it's a deduction to GDP because your net trade balance deteriorates. So that's why there are a lot of economists out there who say, well, we're going to have a 1.5 or 2 or 2.5% negative GDP number for Q1, but it was technical because of all their inventory building. Because of all that inventory building, what these shippers have told me is plants who have intermediary imports that they need for manufacturing things or final goods, that inventory will hold out for some period of time.
Even with the companies like Apple that have said, okay, I'm going to go pull up, another 600 pallets of Apple iPhones and bring them over before these tariffs hit. Is that what you're seeing too as well?
All of it across the board.
Okay.
Walmart's inventory, Hubble, who manufactures, commercial and residential electrical equipment, they all built inventories in anticipation of this to a greater or lesser extent. That means that you won't get the upward inflation thrust, or the good supply shortages and goods shortages. That won't happen on a delayed basis because of that inventory build. But China knows that. Again, the bluff was called not only by China, but the rest of the world. China's on goodwill tours visiting countries right now, building trade relations. I heard Mark Carney talking, who's probably going to be elected the prime minister in Canada. And he's a very smart guy. He was the Bank of England, their central bank, ran that. Now he's going to be prime minister in Canada. And he talked about the G6 countries, meaning the G7 with the US, but how the other G6 countries, it's not their preference to have the United States out of their primary trading bloc partner, a partner in global, in potential war conflicts, in trade, in partnerships on many things. It's a second choice, but they are prepared to pivot away from the United States as a supply chain partner and a distribution partner if these types of policies were to continue.
Yeah, but I mean, they need us for wartime. They need us for money. They need us for just about everything. For them to jawbone that seems a little bit premature, don't you think?
We need them too. We need the rare earth metals. We need raw materials. The only reason we can build cars in the United States at all is because of the vertical integration with Canada, who has very low power, cheap power, and the ability to produce aluminum and steel that goes into those cars that keeps us competitive on a global basis. To tear that apart is a huge mistake. That doesn't create jobs in the United States. It actually destroys jobs. So what I'm saying is we did not put ourselves in a good position on these trade negotiations. And I think we actually improved China's position on the board. Okay,
well, this morning, Trump said that they are talking to China, and China says, well, wait a minute, we're not talking to you at all. We know both sides don't really tell the truth so much. So what's really going on here?
Time is on China's side. We talked about that. Time is not on the side of this administration. They started this thing, and China is they've put China in a better position on the board. That's what's happening here. I think there was an eye-opening meeting on Monday at the White House with Walmart, Home Depot, and Target when they explained to the administration what was going to happen and how it was going to impact the U.S. consumer, right? And so China stringing this thing along will ensure that hit to the U.S. consumer would happen and put pressure on the administration to cut a deal that is more in China's favor. Now, I've said many times, I think China is an unfair trade partner. Had we come at this a different way and gotten the rest of the world thinking, hey, we have to reset trade, and then turn to China as a group and said, you have to reset trade, we would have been in we could have had a much stronger, and we could have said, these tariffs are going to go in stages, 20%, 40% over 15 months, unless you come to the table and work with us. We don't want to put the tariffs in place, but we've got to level terms of trade, which is something Bessent has said. And as the head of Apollo said, the way they went about it was just a mistake. It was just plain and simple a mistake. Now you're seeing the results of that mistake, and that's going to hurt them in things like the Ukraine, Russia. We are less powerful in that because Europe doesn't really trust us. How can they trust us? We've abrogated signed trade agreements with them. We've violated legal agreements with them.
And speaking of trust, I mean, when it's earnings season and Delta, Walmart, Tesla, I mean, if you think about it, Walgreens even, have all, they've all pulled guidance in the future. The treasury bond market has to be a little bit out of whack. They don't trust the president. They don't really know what's going on. So talk to me a little bit about, what are they thinking and why? I mean, pulling guidance is a big deal to me.
Yeah. And especially since Delta went into this year, remember, saying they were going to have the strongest revenues and that their earnings were going to exceed $6 billion. We aren't 100 days into this administration, and Delta cannot give you earnings guidance. From the best year ever to can't give you earnings guidance. That's how far. And Delta is a very well-run airline, probably the best-run airline in the country. I had some people I worked with when I was at Front Point a group of people that were very smart, and they've been thinking a lot about this. And we came up with a slide here that I think is very important. That might help people think about how this administration thinks about how it comes up with this policymaking decision that, as we say, has created this uncertainty for corporations, for consumers, for foreign countries. So there's three constituencies that sit in the Oval Office. On the upper left is the Navarro-Lutnick group. On the upper right is the techno-feudalist group, which was represented by Musk, but other Silicon Valley interests. And on the bottom is the third group, which is the Scott Bessent group, right? And I would say, if you've noticed, Bessent has, after the bond market sort of got a peek over the cliff, Bessent's voice has been the leading voice you're hearing right now, which is what I thought would happen both 2 and 4 weeks ago. Because
okay, so a lot of people think that Navarro and Lutnick might be out. You see that happening?
Rumors, I don't know enough about that to make a call, but I will say that it's there are three sort of ideological principles that these three groups are presenting differing views on, right? The first is the tariff and the spending. That is, cut spending, generate revenue by charging access to our consumers, right? That's the Lutnick-Navarro group. And they basically chide people who want to back down on that sort of flood the zone approach they used as being weak. They even have a name for them. I can't remember the name they use. They've got some name for people. And it was Mnuchin and Rex Tillerson, the Exxon CEO, and Paulson, who kept this from happening in the first administration. But you don't have that kind of A-player strength here, okay, other than Bessent. So this extreme tariff and spending cut, the spending cuts were pushed by Doge over in the techno-feudalist camp, and Navarro and Lutnick on the External Revenue Service and the massive tariffs on everybody camp.
So are you saying that this Navarro, Lutnick, Scott Bessent, and techno-feudalist camp all have three different varying views to these three things of tariffs, China, and populist?
That's right. They push these to a greater or lesser extent, depending on which camp you're coming from.
All right, so let's start with Navarro, Lutnick. What are their ideas on tariffs?
Obviously, their big thing are the tariffs and the spending.
Gotcha.
I think the China fixation is shared by everybody here. The techno-feudalist camp is in a war with China over who's going to dominate AI. Navarro and Lutnick believe that China is an unfair trader, as does the Bessent camp, and they are. China's an unfair trader. But the fixation to just attack using the Cohen approach has not worked. It's put them in a bad position. But it's certainly...
So define to me what the China fixation means. Is this the China trade, or is this China in general to the whole world of Africa and everything else going on with China?
You know, the way to get to support for any administration is to have an enemy. You know what I mean?
I got you.
Have an enemy. And so making China the enemy, right, seems to be, they almost seem obsessed with it. From a global perspective, this seems to be an obsession in the room for different reasons. Let's be clear, China is an unfair trader in the world. The neo-mercantilist economic policy they have, it does create imbalance, not only for the United States, but all economies. The third piece here is the populist social issues. So those play themselves out in dismantling funding for sciences at universities, going after DEI. Bessent made a speech yesterday about restructuring the World Bank and the IMF, and they want no climate change agenda. They shouldn't even talk about it. It shouldn't be on their radar screen. No LGBTQ, no DEI. And no, none of that. It's sort of, they're going to try to get these world organizations to adhere to their social policy agenda as well. So that there's this, all these views get presented, and then statements get made in no specific order that relate to that interaction by those three constituencies around those three primary issues that drive the ideological thinking of this administration. And that Venn diagram is, I think, a very helpful way to think about what looks like just this random, shotgun just firing off in different directions. It's coming from that dynamic. And
all right,
that's
Michael,
why
I have to ask you then, and I'm asked this literally every single day: is DEI dead?
Well, I think it went too far.
Right.
Pendulums swing too far one way, and then they swing the other way. DEI was becoming inordinately disruptive for businesses, and LGBTQ agendas were taking up 99% of the air and the oxygen in the room for 1% of the population. This pendulum had swung way too far, in my opinion. And when pendulums swing very far one way, they swing back very quickly the other way.
The pendulum swung too far now to the other way?
I think that again, the very aggressive nature of this administration doesn't mean that people's views on these things have changed. I think they're going to try to force those social issues. And I remember, those populist social issues are to keep their constituency loyal, because they are going, all this social rhetoric plays to their voting constituency, and they have to keep an eye on the midterm elections, right?
But I mean, is this a game plan from the administration, or is this just people expressing their views about the administration itself?
One of the guys that came up with that Venn diagram with me said that it's almost like a 2-year-old child who wants attention and wants adoration. And you get attention and adoration for doing things that are sort of those issues around the populist social agenda. Those are attention getting, those are get you praise. And so in a way, but I do think that Republican congressmen and senators know that they see the sort of approval surveys. They know that they're going to have to really pander to that populist social agenda if they're going to have a chance in the midterm election. So that's going to be a constant theme for sure. That's not going away.
All right. So you say all of that. I have to ask then, what is it that you're actually worried about? What are the things that you're actually worried about? As Michael Litt, a strategic investor, you advise major companies and especially sovereign wealth funds. Talk to me about what it is that you're telling them in regards to, I am concerned about this the most.
Okay. Well, let's talk about what we told them to do, right? Because they cannot spend on a dime. They're not day traders, right?
Right.
And they're far from it. They're like turning around an aircraft carrier, right? They need like a 15 miles to turn the thing around. So first of all, the Mag 7 are the worst performing securities, right?
Correct.
S&P 493, as of yesterday, it's probably a little better today, was only down 2.4% on the year, Stephen.
I know. Yes, correct.
We told people what? What did we tell them? Get out of the Mag 7 and hold your 493 position, own value. Gold has been stronger than I expected. I should have caught gold more. I thought it could hold up well because the central banks would be, if Trump was going to try to weaken the dollar, central banks would be price incentive to buyers, but it's done even better than I had expected. The value stocks that I talked about, utilities, consumer staples, financials, and industrials have been the sectors that have performed, right? So That value bias has paid off. Meanwhile, my European large cap equity manager that I stayed with back in February when I sold half of my stocks, he's up 14% year to date. He's up 4% on his stocks. He's up 10% on the euro, right? There's far less collateral damage because money's flowing overseas. Now we can see the markets have stabilized here the last 3 days, okay? Since Bessent got out in front of this and has been the messenger. But notice something, Stephen. What's happened to the dollar? Nothing. It's right
down. It's come back a lot. Yeah.
No, it's sitting right on its bottom. It's at 114 against the euro, which is where it's bottomed out. There's the money flows are not into the U.S. This is like right. We're buying it. This is internal money. Money flows are out of the U.S.
Yeah, but the foreign investment that was in our bonds, they sold the bonds to China with Japan. They've been selling since, I guess, December of last year. That should flow in the U.S. dollar, but you're right. They've been taking that money out of the U.S. dollar. I mean, what are they doing with that money? I mean, I think for me, this administration spent at least a year harping on one thing, and they said that the federal deficit was out of control. And they put Doge in charge, and Elon Musk in charge, and Howard Lutnick and the External Revenue Service. Talk to me. Are they going to, I mean, did they fix the problem yet? We've only been 100 days in the system.
Let's go back to a statement you made earlier. Rumors that Lutnick and Navarro are going to go. If they do, that's very constructive for the markets.
How so?
That's a buy.
How so?
Okay. Because that they have the method by which they implemented the administration's objectives was inadvisable and poorly executed, and it was poorly communicated.
Right.
I think they failed on, and that has put us in a compromised position as a country in relationships to everybody. Now let's go back to what you said before. Where is that money going? It's going to go into those domestic economies. It's going to accelerate growth in overseas markets. You see emerging markets and large cap developed markets are performing well because there's going to be more. They're anticipating less capital going into the United States, less foreign direct investment into the United States. And you asked me earlier, what do I worry about? I worry about a couple things, but one of them is that the American exceptionalism that we have enjoyed for the last 25 years, since really about 2000, has been on the back of a chart I showed earlier where foreign direct investment in this country went from $1 trillion to $7 trillion.
Right.
I believe that we may actually start seeing foreign direct investment into this country flatten and actually go down. If we have a recession, it could go down, but I think it's going to go down for a structural reason in response to the way this administration has handled this trade and tariff policy.
Okay, but we did get some cuts, right? I mean, we did see some government spending cuts. I mean, that should make foreign governments go, okay, you know what? They're getting their fiscal house in order. Elon Musk cut a whole bunch of stuff, and Social Security is not going to grandma and grandpa. They're going to foreigners. Is that right?
No, it's not. First of all, there's going to be about $200 to $250 billion of spending cuts from the discretionary budget. But keep in mind, 4.6 trillion of the 6.5 trillion is Medicare and Social Security payments and transfer payments to states, which is mostly for education spending. Now, if they start cutting into education spending, we're in trouble as a country.
Well, we already have, right? I mean, isn't he trying to get rid of Department of Education? He's trying to get rid of.
It's a problem. That would be another structural problem for this country when you undercut, grade school and high school education. Okay, there's about 900 billion in that 4.6 trillion. There's Social Security, there's Medicare, and then there's the money for education and infrastructure, highway building, which is all domestic spending, right? It's domestically sourced materials, it's domestic labor, domestic equipment. But if you, Apollo did an interesting thing where they said, if we have a 4% reduction in GDP from 2% positive to 2% negative, and interest rates go down 2%, we save about $570 billion on financing the deficit, but we lose $1.3 trillion in tax revenues, meaning the deficit expands by $730 billion. We're not going to get the revenues they're projecting from these tariffs. Countries will divert trade away from the United States. They'll still trade with us, Stephen, but the projections for what they're going to collect might come in at 30 to 50% of what they think. Okay.
Yeah, I'm posting.
And there's going to be there's going to be blackmail. Remember, I said stuff that's going to be smuggling is going to go around. So the amount they collect is going to fall far, far short of what they think they're going to collect. And so this $1.9 trillion deficit we think we're going to have, if they enact the tax cuts, they're not collecting the revenue. We are in a recession. You could see a $3 trillion deficit. That worries me, Stephen, about what the administration. That worries me.
Repeat that $3 trillion deficit. I'm not worried about
1.9 trillion, right? You go into a recession, right?
So he's actually done the exact opposite.
What happens if you get inflation, some inflation, not stagflation, but some inflation and a recession, and interest rates stay right where they are? Well, you don't get the $570 billion pickup on your interest savings. So now, right away, you go from 1.9 to 3 trillion. This is not a good policy mix in terms of the deficit coming down over the next 12 to 24 months. That is the second thing that concerns me, besides this country having spurned the benefits, the terrific benefits of foreign direct investment. Those foreign direct investments greatly outweighed whatever trade deficit we were running. We were running a trade deficit. They were reinvesting their money back with us, and private equity and venture capital, growth capital, real estate, private real estate, all kinds of real estate deals are driven on this foreign direct investment. If that is going to recede to some degree, that is going to hurt. It's going to hurt on a lot of levels. It's going to hurt all those private investment businesses. It's going to hurt valuations. It's going to hurt cap rates. It's going to hurt multiples. And if you then have an expanding deficit because of these other factors I just touched on, that is why if Lutnick and Navarro go, it reduces the probability that that scenario comes to fruition.
Okay, so last weekend I was out and about, and 99 times out of 100, I'm always asked what stock to buy. I was not asked one time what stock to buy. I was asked one specific question all weekend long. Will the Fed lower interest rates?
It's funny because remember when I talked last year about 2 years ago, I started talking about owner equivalent rent. It was probably the most boring topic. I think you fell asleep during that interview. It was so boring. Owner's equivalent rent. All of these communities overbuilt multifamily, and rents are actually dropping. Rent increases are dropping. Rents are going negative in some markets. Owner's equivalent rent now has a 3 handle. Remember when it had a 7 handle on it and everybody was fretting about inflation? And I kept saying inflation's going to come down. The Fed's going to be able to cut. We're still in a bull market. Well, owner's equivalent rent is still coming down, and it's probably still going to go down for a while because it's so lagged. It's so lagged. Right now, multifamily building is going down, but that won't hit the market for another 18 to 24 months. So I think there is a window where you do get an improvement in the inflation figures. And depending how much the administration pulls back on this not very well thought out approach to leveling terms of trade with other countries. If they pull way back and owner's equivalent rent goes the direction, because remember, it's like 46% of the CPI calculation.
Yep.
You could argue, if both of those things happened, for an interest rate cut. If the tariff policies don't recede significantly and the administration backs the truck up and says, okay, we're going to take a different approach to this. We're going to try to level terms of trade over time. We're going to get our trade partners like Vietnam and Canada and Mexico and Germany on board, and then we're going to approach China. If you do it in that order, I could see the possibility of rates coming down because CPIs could justify it. But if this inflation and if we run out of this inventory and you start having shortages of goods and you start having price increases, okay, before you get this trade thing, again, time's not on our side here. We've put ourselves in a game where time is on China's side now. So the administration is going to have to eat crow. Possibly the two people you mentioned earlier will have to go. That would be a sign we're moving in that direction. Then I would say you have the precursors to the possibility of a rate cut because owner's equivalent rent is going to support it.
Okay, so with all of this quote damage to the economy and to the United States, do we come out of this smelling like a rose, or does it take time to come out, or is the president going to have a victory lap down the road?
I'm sure the victory laps are guaranteed, first of all. That's an easy one. It's going to take time. It's going to take time.
Define time for us.
I think that we won't know how much damage has been done until we see how foreign capital flows and investment in plant and equipment. Now, I know I was told, this is interesting from, I like to, macro data is very delayed here, Stephen. That's the problem. The stuff that Wall Street feeds off of, you actually need to go to micro data to find out what's going on right now.
You mean like at Quasar Markets?
Quasar Markets. So Harbor Freight, very successful company, opens up 150 new locations a year.
Mm-hmm.
They've gone, guess what? This year, the 150 number has gone to, Stephen.
I have no idea. Zero. Oh,
Zero.
My.
J. Crew, no new stores. The reaction function has already begun, Steve.
I mean, but Chipotle is opening up in Mexico. I mean, there's still things going on. I just saw where the Switch 2 from Nintendo was, they're averaging in the past 3 to 4 million sales. They've got 6 million already pre-orders. So things are still moving. Is it just tech? Is it that's the only place where things are still moving, not in clothing and retail lines?
Tech is really impacted by the trade, just the way that the trade issue was addressed and the acerbic relationship it's created between China and the U.S. What's interesting is I saw a survey that more Southeast Asian, for the first time in, 50 years or something, Southeast Asian countries now favor doing business with China over the U.S.
Oh, my. Well, on that note,
that's happening. That's happening. That's what I'm saying. This is in process. How much permanent damage it does to our position in the world, our ability to help negotiate the Ukraine-Russia, our power base. I think our power base is, we've lost a little bit of juice. And I think that the foreign direct investment is going to be redirected at the margin, not all of it, but at the margin, because the U.S. is still the biggest investment opportunity in the world. Let's be clear. But people are going to diversify away from the U.S. as a result of what has happened in the first 3 months of this administration. How quickly they can pull back, how quickly they can continue to pursue their agenda, which many of we talked about 6 weeks ago, has a lot of very good elements to it, but do it in a way where they get incremental gains rather than trying to take the whole enchilada. I think the biggest problem, Stephen, was there was this presumption on the part of the administration that other countries don't have agency for their own people, how they govern, what their policies are going to be, that they don't have the agency as a independent sovereign state. And that was a mistake because they do. And we cannot tell them how to run everything in their country. I think we need to balance terms of trade. We needed to send a message that we were serious about this and maybe incrementally put these tariffs or something in place, change the dynamic of how we did trade negotiation. Certainly, this approach didn't work, and now they've called our bluff. They've put us in a more compromised position on a global stage, and capital is going to shift away from the U.S. and valuations on our stocks are going to be lower on average over the next 2 to 3 years. You asked me about timeframes.
I did.
On average, over 2 to 3 years. And if that capital's going elsewhere, that reduces growth. And the premium you're going to pay for growth, which tech had, and tech's gotten hurt, is going to come down. That's why value stocks, which aren't as dependent on growth fuel, are outperforming. They will likely to continue to outperform unless the administration pulls way back and resets its agenda with maybe different people in the administration.
Well, I appreciate you, Debbie Downer, for coming to the show today. Look, you know what, Michael, I mean, is there a silver lining somewhere? Is there something here that people can take away from this and go, look, all right, I get it, Michael. You brought the damage and the terrible and the Roman and Trojan horse here, but what is it that we can hang our hat on that could be good news that you're seeing in the markets?
The consumer's in great shape. Their balance sheet's in great shape. They still have a tremendous. If you look at their checking, money market, and what we used to call M1 deposits, they're over $18 trillion, up from $14 trillion before in 2019. Great shape. Corporate debt to market value, all-time low. So we go in with this very, very durable backdrop, right? And we came in with consumer like Delta's expectations for a record year was baked off what it was seeing. People wanted to travel. They wanted to go out and spend. They have money. They're fully employed. So this hit that the U.S. has taken was not at a moment when we were compromised. The government's borrowing has come as a result of this country having a low tax regime.
Sure.
A tax regime like Singapore has. But we have an aging demographic to pay for through our Social Security and Medicare. The reality is we probably need I'm a Republican, a moderate Republican, so I don't like to say this, but you can't pretend that doesn't exist. Right?
I mean, I think if we just call up Naomi Whitehead, the 114-year-old lady who the Doge thought that it was dead.
Doge's 19-year-old guys didn't understand. They used COBOL, this ancient language that was even ancient when I was learning programming in college, but they didn't have the date of death in the figure. So they thought there were all these 125 people. And they found out there was this woman who was 114 in Pennsylvania getting Social Security. Her name was Naomi Whitehead. They called up, she's actually alive. And so it was like that whole thing was like an absolute snipe hunt. It was nothing. So the truth is we have to deal with these transfer payments. What we should have done is gone out and done facial recognition, retinal scanning for everybody who's getting Medicaid and Medicare. Let's get those systems in place. Let's make sure the people are getting them. Let's make sure the people who are claiming they can't work and are collecting disability, which is a big area of fraud in Medicare, Medicaid, and anybody who's getting Social Security who shouldn't be. Let's get that and say to them, if you don't get your facial recognition and your retinal scan, you'll stop getting a check in 15 months. And that, guess what? They'll come rushing in because everybody in the country will know it was their responsibility to do something. And if they didn't do it, you weren't taking money away from somebody. That's what we should have done. That's what I thought, well, gosh, Trump, I mean, Musk understands technology. He's around smart guys in Silicon Valley. Why he should have used this.
And
time.
I mean, in this day and age, AI can actually fix COBOL and bring it up to speed. So I don't know really what's going on.
And then update the technology on which the records are kept, but the identity, we can solve for that. I mean, we're not
blockchain, everything else can handle this now.
We can handle that technology and that volume of computing. And that's what we should have been doing to put ourselves in a position to make sure that going forward, we were only paying out monies that were due. And then the truth of the matter is there's going to have to be means testing on Social Security. If you're a wealthy person, this country cannot afford to give, say, the 20% or 25% of the most wealthy people, even if you put it into the system. And a lot of people get on me about that. But the truth is, as a country, we cannot lay all this debt on these kids, right? On the Gen Z and Gen Xers, because some wealthy person wants to get the Social Security. But taking from that generation.
Yeah, but I'm disagreeing with you because I think if I put it in, no matter how I've done well in life, I should be able to take my own money back out. It's my money.
I hear you, but again, it's not your money. It's some 25-year-old kid who's going to have to pay the debt back.
That's true. On that note,
you don't have the money. The money isn't there.
But it's money that I put in. Social Security.
Anyway, Stephen, always great to talk. And
I'll see you here in 2 weeks, Michael Litt.
All right.
Global investment strategist. Thanks, man. Appreciate it.
Adios, folks.